Hello students, welcome to Vidyarupa Academy CMA Foundation class for Fundamentals of Financial Accounting and Cost Accounting. So today is the first class for CMA Foundation December 26 attempt. We are going to go into the first topic, which is the frameworks of accounting and forms of organization. So before we go into the topic of fundamentals of accounting and start learning accounting, what does accounts mean? Accounts is not something new that you are going to study. The practical aspects of accounting in a very crude form you would have already seen in different walks of life. You would have seen your parents preparing a monthly budget for household expenses. You would have thrown a birthday party to one of your friends. So 10 of you would have joined together and decided to throw a birthday party. And what do you need for the party? You need a birthday cake, decorations, snacks. So you would have purchased all that, then calculated what is the total expenses that you have incurred, and you would have divided it among yourselves. So what is this? This is a form of accounting only. You are identifying what is the expense incurred and how it has to be divided among your friends. Your parents are identifying what is the income that they are earning and how much should be the household expenses. If there is a sudden expense, it could be like buying a new vehicle or going to invest in a property, saving for the future education of their children. So for this, they will identify what is the income that they are earning, how much is the expenses, monthly expenses, how much they can save, and how the savings should be invested so that it gives appropriate return in future, so they can use that money for the education of their children. They can use the money to purchase a property, to purchase a new vehicle, for making investments. So this is also a type of accounting. So accounting is nothing new that you are learning. You have experienced the practical aspects in your day-to-day life. Now, while learning accounting, you are just putting those practical aspects, those small puzzle pieces together so that you can learn how to account in a formal way, because there are certain rules and regulations that needs to be followed when you are accounting for an organization, for a business. So under fundamentals of accounting, we are going to learn what exactly is accounting and how it is being implemented in businesses. So with respect to business, what is the main aim of a business? The main aim of a business is to earn profit. How to earn profit? It is income minus expenses. What is the total revenue that you are generating and what are the expenses that you are incurring? Income minus expense is your profit. Now this is not as simple as this sounds. There are expenses which you will be incurring today, that is the bill will be submitted today, but you will be able to make a payment after 1 month or 2 months. Similarly, one customer will come and they will purchase X number of goods today, and he'll say that you give me 30 days credit, within 30 days time I'll make the full payment. So these are to be accounted properly to identify the profit or loss. And accounting is also very important for a businessman to understand how well the business is performing. Because like I said, the main aim of any business is to earn profit, to earn an income. Now, how will a businessman understand and identify whether they are earning required profit or not, whether they are growing the business or not, only if there are accounts maintained. So that is the main aim of accounts. So an efficient accounting system in the organization is very important for the growth of the organization, to ensure that the business is moving in the right direction. It is not just to have a good idea. Along with a good idea, you should also know how to implement the idea effectively, how to manage money effectively so that you can earn a profit. So many businesses fail because they don't have a good accounting team to give directions, appropriate directions on how to manage cash, how to manage the finances, what are the different ways in which you can raise finance, and how the accounting has to be done. So, a good accounting team is very important for the success of a business. So, next we will see the key definitions with respect to accounting: bookkeeping, accounting, and accountancy. So, these three terms in layman's language we keep interchanging them. But there are certain minute differences between the three terms. Bookkeeping is recording of business transactions. It takes into account only the recording aspect. Whereas accounting is the process of identifying, measuring, recording, classifying, summarizing, analyzing, and communicating the financial information to the users for decision making. So here one important thing that you should note, and for CMA Foundation you get MCQ questions. So accounting includes identifying, measuring, recording, classifying, summarizing, analyzing, and communicating. So bookkeeping is just one aspect of accounting where you are recording the transactions. But accounting, it begins before bookkeeping and it ends after bookkeeping. So how does accounting work? As an accountant, I am working in one grocery shop. Okay, I make a few purchases. So the different types of purchase bills will be submitted to me. Some will be purchases in course of trading. That is, if it is a grocery shop, we will purchase groceries from a wholesaler and then we will sell it to the customers. So there will be purchase bills relating to grocery. Then there will be maintenance bills. Grocery shop needs to be maintained. So there will be maintenance bills. Rental bills, rental invoices. The shop, if it is rented, every month you need to pay the rent. There is rental invoices. So there will be different types of bills and invoices submitted to the accountant. The accountant has to identify each of the type of purchase. What is the type of purchase? And then he has to value. The value will be mentioned. In some cases it will be including taxes, in some cases it will be excluding taxes. So he has to identify what is the value of each of the goods purchased or services which has been received, for which the bill is submitted. So there is identifying and then measuring. Once you have identified this is a purchase of groceries and the value is 10,000, then you can go ahead and record it as purchase of goods 10,000 rupees. If it is a rental invoice, I will identify this is a rental invoice. This is purchase of service. So I will accordingly record it as a rental expense. So the first one was purchase of goods. I am recording it as purchase of goods 10,000 rupees. The second one I am recording it as rental expense 20,000 rupees. So there is identifying, measuring and then recording. Then comes classifying, summarizing, analyzing and communicating. Classifying. This we will be learning in the upcoming classes. We will take it up in detail. We have to classify the income and expense. Income can be classified into direct and indirect. Expense can be classified into direct expense, indirect expense. There are different methods of classifying expenses and income. So that we will deal it in detail. So there is classification involved. Then summarizing. Once all the expenses and income are recorded, we need to submit it to the owner of the business. If it is a company, we need to submit to the shareholders, to the management. We cannot submit hundreds and thousands of transactions just like that. It has to be summarized. So for summary, we will be preparing trial balance, profit and loss account, balance sheet. These are summary of accounts. And then these summarized accounts needs to be analyzed and then finally communicated to the management. So the entire process from identification of the type of purchase or type of sale, or type of expense or income to communicating the final summarized accounts to the management is covered under accounting. Next is accountancy. Accountancy is the entire body of theory and practice of accounting. So accountancy is nothing but what we are studying. The entire science of accounting can be considered or can be regarded as accountancy. So three words, generally we use it, quite often interchange it, but there is wide difference between bookkeeping, accounting and accountancy. So I hope this key definitions are clear for you. Next we will go into what are the objectives of accounting and functions of accounting. Objectives of accounting, like I said, the main important object is to understand what is the financial position of an organization and what is the profitability of an organization. And that could be identified only if proper accounts are maintained. And it is not just recording of transactions, it involves everything from identifying a transaction to recording it, summarizing it, analyzing it, and finally communicating it to the management. So functions of accounting, from the definition of accounting itself, we have discussed the functions of accounting. So I am not going to discuss this again. Identification, measurement, recording, classifying, summarizing, and then interpreting and communicating or analyzing and communicating the results to the end users. So this is a very important MCQ question. You can remember this by relating it to one of the examples that we have discussed. Like think of a grocery shop and think of you as an accountant. You are first receiving the bill and then in the bill you are identifying what type of transaction it is, what is the value, that is measurement, and then you go ahead and record it in the books of accounts. And later on, all the transactions, once they are recorded, they are classified and then they are summarized. And then you analyze the result and communicate it to the management. Next is 4 frameworks of accounting. Frameworks of accounting can be divided into four: conceptual, legal, institutional, and regulatory framework. Now, what is meant by a framework? So, framework defines certain rules and regulations within which you need to operate. Like I said, bookkeeping is just recording the transactions. You are recording the income, you are recording the expenses. But when it comes to accounting, there are certain other aspects also which has to be covered over and above just the recording of transactions. So they are bound by certain rules and regulations which are called as frameworks. So first one is conceptual framework. This is the body of interrelated objectives and fundamentals that guides how the transaction should be recognized, measured and reported. That means if I record the transactions on cash basis, we will take the example of a grocery shop was supplying certain groceries. One customer came. He told that you give me 10 kgs of rice, I'll make the payment next month. Credit sales. So the owner also agreed and he supplied 10 kgs of rice. Now, how to record this? Whether the sale should be recorded because he has not yet received the money. So he is thinking, I have not received the money, so how can I record it as a sale? I will not record it as a sale. So income is not being recognized. Another grocery shop owner, next store, the same customer is going and he is purchasing 10 liters of oil. He is telling the same thing to that owner also. He is telling that I will pay after 1 month. That grocery shop owner also agreed. But he thought, see, the sales has happened. I have sold 10 liter of oil to this customer. I should record it as a sale. He is paying me 1 month later. But now the goods are not with me. The goods are with him only. So I will record it as a sale. Now what happens? If there are no rules and regulations set, each person does accounting in his own whims and fancies. Can you compare two accounts? You will not be able to compare the accounts. Because Mr. X is following his own rules, Mr. Y is following his own rules. There should be uniformity in accounting. Then only you can compare the accounts of two entities. You can compare the accounts of the same entity over a period. How will you identify if the business is growing or not? Only if you see their profit across 3 to 4 years, you can see that, okay, the business is growing, or there was a dip in the business, there was a loss in the business, now it has recovered. How is analysis possible? Analysis is possible only if you have uniformity across different years, uniformity across different entities. And this uniformity is achieved through conceptual framework. Conceptual framework lays down certain rules and principles that as an accountant, all the accountants need to follow, all businesses need to follow to ensure that there is uniformity in accounting, and thus you can compare the accounts of two different entities and see how they are performing. You can take informed decisions based on the accounts prepared. Next we come to legal framework. A conceptual framework based on certain principles you need to do accounting. Now there are different type of organizations. We have proprietorship concerns where only one individual runs the business. We have partnership concerns where a group of partners run the business. We have limited liability partnership. We have companies. We have under companies itself, we have different types of companies. We have one person company, we have private limited companies, we have public limited companies. So there are different forms of businesses. And different forms of businesses are governed by different act, law. Partnership Act governs partnerships. Companies Act governs companies. Under Companies Act, there are specific regulations for one-person companies. There are specific regulations for private limited companies. There are specific regulations for public limited companies. So, there is legal framework that has to be complied with when we are maintaining accounts based on the form of entity. Then institutional framework. Institutional framework like ICAI. There are ICAI accounting standards. Then there is Ind AS. Then there are IFRS. So different institutional bodies who are required to ensure uniformity and who are required to monitor the implementation of accounting in the country and across the globe. They have come up with certain accounting standards which has to be followed by all business entities. It could be relating to different aspects of a business. Like for inventory, there is an accounting standard. What is inventory? Inventory means stock. The goods which are not sold, which are lying as stock, is called as inventory. For recording inventory, there are special accounting standards. There are accounting standards for depreciation, that is wear and tear of an asset. There are accounting standards. So for each and every aspect of accounting that we do, there are separate standards that we need to abide to. These are called as institutional frameworks. Next is regulatory frameworks. Now India has many regulators, like RBI is a regulator with respect to banking companies. SEBI, IRDA, PFRDA. So these are certain sector specific regulators. So sector specific regulators meaning specific banking sector, insurance sector, and SEBI is governing all the public limited companies. So sector specific regulators, they have set certain special standards which has to be abided by the companies or the organizations working in that sector. That is regulatory framework. This regulatory framework is required in certain sectors where there is too much of money involved, public money involved, and more protection is required. That is where regulators come into place. So these are the 4 frameworks. Frameworks are nothing but certain rules and regulations that governs the accounting, which can be divided into 4 segments: conceptual, legal, institutional, and regulatory. So forms of organization, I briefly discussed it just a while back, because when we discussed about the legal framework. So legal framework is based upon the type of organization. So what are the different type of organizations we have in India? We have sole proprietary concerns, we have partnerships, we have LLP. LLP is limited liability partnership, and we have company firm. For sole proprietorship, it is largely unregulated. Mainly we comply with income tax rules and regulations and the general conceptual framework. That is what is generally used in case of sole proprietorship. When it comes to partnership, there is a separate act, Partnership Act, which governs the partnerships and the accounting of partnerships. For limited liability partnership, we have LLP Act that governs the accounting and all the regulatory aspects of limited liability partnership. And in case of companies, we have Companies Act 2013. So each of the act also prescribes a particular format in which the books needs to be summarized and presented. There is a specific format in case of Companies Act for preparation of P&L account, balance sheet, cash flow statement, and statement of changes in equity. In case of LLP also, we have a specific format in which the LLP accounts needs to be prepared and submitted. With respect to Partnership Act also, we have a specific format. The format in which the accounts need to be summarized is governed by the legal framework. So with this, we will close the class for today. Tomorrow, we will go into accounting principles, concepts, and conventions. And please prepare well. You use your study material, read through your study material, take notes, and wherever you find that there could be a possible MCQ question, highlight the MCQ questions so that it will help you to prepare just the day before your exam. Okay, happy studies.